And we are live. All right, ladies and gentlemen, welcome to the Superlative podcast. I'm your host, Edward Bushi. Every episode, one guest, a founder, investor, operator, or someone who's built or competed at a level most people only read about. The conversation covers their journey, what they discovered along the way that most people never get to hear, and where they think their field is going. No edits, no post production, just one sharp conversation. So before we get into your story, two sentences. What is Caduceus Capital Partners and what are you building right now?
Edward, great to meet you. I appreciate it. Always sensitive to naming names on episodes like this, but I'm one of the managing partners at Caduceus Capital. Before that, I had a long career with Deloitte, founded, built, and scaled our focus on innovation and health technology. We are a private investment fund focused on innovation in health at the convergence of health and technology. But we believe it takes more than capital to scale a business. And so we've built out capabilities around launch acceleration, talent acquisition, and advisory, particularly around the go-to-market strategies of companies to help them accelerate their businesses. So really enjoying this next chapter in the evolution of innovation in healthcare.
Yeah, I know you guys are doing a lot of great things. So just a little bit of backstory before we get into Caduceus, right? Before we get into the thesis, also, I have to ask for the viewers out there, what is a Caduceus, and why did you and your partners name a venture fund after it?
Well, the caduceus in Greek mythology is the medical symbol that we all see. That's ubiquitous, really, in today's society. We were surprised that it was still available. We think it's representative of, our focus on funding, scaling, and helping accelerate the growth of innovation in healthcare and its new evolution. Healthcare has changed dramatically over hundreds of years and will continue. We think investors that are focused on better quality outcomes at a lower cost and providing better access to an ever-changing world is important. In an environment where technology is ubiquitous, we believe that relationships, channel partnerships, and the ability to formulate those relationships in the marketplace are an important part of, and just as important as the innovation in technology and helping to grow businesses.
Yeah, and it sounds like that's more than channel partnerships, more than anything else. But before we get into that, right? You spent years at Deloitte as a global partner, leading their healthcare and digital health practice. That's a career most people would stay in. What were you seeing from that seat that made you, want to leave that job and start something of your own?
Yeah, I mean, we saw all types of innovation in the marketplace and helped many traditional market incumbents in helping them scale their business. But ultimately, healthcare changes, and we saw a shift in reimbursement, cost pressures, a movement towards consumerism, ultimately convergence with other sectors, and a fair amount of consolidation. We called it the 5 Cs at the time, and ultimately set the foundation for a new innovation, new investment, and new opportunities in healthcare. We believe that is, just starting, COVID really accelerated the awareness of kind of the lack of investment in innovation and technology in healthcare, and we think it's been a springboard for new opportunities.
Yeah. So, your fund now, is that your third fund, like 7 years in? Like, what did that fund teach you about investing that you couldn't have learned any other way? Was that where the channel partner thesis was formed after the first fund, or?
Yeah, I mean, look, we ultimately people are still important in a world that's focused on technology, and so we believe focusing on founders and investors who have a track record of understanding how to scale businesses, organizations that are solving the big issues in healthcare, whether it be affordability, access, social determinants, and the like, and have the appropriate level of channel partnerships to help them accelerate that growth. We wrote, there's a white paper we've edited. It's on our website that ultimately kind of outlines the parameters of that, but it's not new. When you take a look at even some of the more significant technology organizations in today's world, OpenAI, NVIDIA, et cetera, they're all reliant on channel partnerships in some way to fill the gaps in their solutions and help accelerate and bring to market their product or solution in an expedited way.
Talking about AI, I remember in our conversation earlier in our onboarding conversation, you talked about how if they were doing AI or just keeping things at a very surface level, you would just avoid them, right? So like when a founder opens with, we're an AI company, you almost want to throw up. Why does that framing bother you so much? And what does that tell you about how the founder thinks?
Yeah, I wouldn't use those words, but
I'm sorry. Yeah.
But ultimately,
my word, sorry.
AI is a new and powerful technology, and every organization that looks to deliver better outcomes at a lower unit cost will need to utilize new technologies, and AI is a very big part of that. But saying that you're just an AI company, I think is misleading. I counsel organizations to really think about the big problems they're solving, what their value proposition is, what the return on investment is to their ultimate customers, and how they help them deliver their services in a more efficient way.
Yeah. So when doing research about Caduceus, I came upon the HLTH 2025. Could you walk me through that moment? You're in the room, you're watching health systems and payers and tech incumbents present, and then something clicks. What did you see that confirmed the channel partnership thesis?
Yeah, I mean, HLTH is a really well-known and prominent platform for digital health technology. It convenes really all of the market participants from payers, providers, life science organizations, investors, founders, and the like, technology companies. Investing takes twists and turns, over the years. Ultimately, valuation is dependent upon your ability to create revenue and new customers. In an ever-changing world that's just rapidly accelerating, it's impossible for any organization, large or small, global or non-global, to have all the assets they need to keep pace with the change that's occurring. And so, our viewpoint of channel partnerships was always a big part of our thinking, but it kind of manifested itself in a more significant way that we memorialized in a specific point of view that we have in the marketplace that we're sharing with both traditional and non-traditional market participants in the industry.
Yeah. So I know you started forming your thesis about like channel partnerships and even built a white paper around it, right? So just a little bit about that. Your white paper makes a case that in a world where AI models can be replicated by like 5 people in MIT in a week, the real moat is distribution, not technology. When did you first believe that, and when did you first have proof of that? I know you're applying it right now, but when did you just think?
Yeah, I think that's been true all along. The real moat in organizations is your ability to take your product or solution to market before competitive forces take place, and to the extent traditional or incumbent channel partners can help you do that. That's just not a new concept. I think what's changed is the pace, and the pace and timing is accelerated. Um, Organizations don't have as much leadway as they used to in terms of being able to adopt product market fit, and thinking about what has traction in the marketplace, validating their return on investment, ensuring the consumer will accept it, assuming the technology does not disrupt existing workflows, does not add additional time or effort to a workflow, are all concepts that are not new, but I think the pace of change has made that evolution more important.
You pulled back a little in our call. You said that you can't make overarching statement that companies without channel partners will fail, but your thesis is getting close to that. Where is the line? What kind of company can still win on technology alone in 2026, or is that zero?
I don't think it's a zero sum game, Edward. I think trying to put parameters around what work or doesn't work is really not a good exercise. I think it's a spectrum of opportunities. Every organization needs relationships in the marketplace to grow their business. Some of them take different forms. Channel partnerships can take many different forms. They can be, uh, you know, financial, non-financial, joint ventures. They can take, incentive sales arrangements, or many ways. But the the concept is that both of the technology opportunities and channel partners and your go to market both need to be in place for organizations to be successful. I think trying to win the day on technology alone, um, just has proven to not be as successful as organizations, and vice versa. So I don't think it's a zero sum game at all.
Hmm. So, as a startup founder myself, right? I learned like when your distribution is part of the game, and earlier on, right, that you could get partnerships in the form of LOIs. But another thing I've learned is uptake agreements, and we're getting to into another call with that with another a guest later on. Like in terms of of getting that kind of traction and getting the starting from scratch, right, as a company, like how do startups make those channel partnerships in the beginning? Like how does it like really look like?
Well, I think it starts with understanding who your customer is, right? Are you who you're selling your product or solution to? Do you need product market fit first with a consumer, and then taking a B2B model? It starts there, and understanding the kind of the ecosystem that your product or solution plays in, and who those potential channel partners are. Sometimes could be a surprise. They could be non-traditional market participants who play an important part of building awareness or adopting product market fit in a way that perhaps you haven't thought of. And I think exploring those opportunities, being inquisitive, asking the right questions, being open-minded about your current business model and revenue model, being willing to change and adopt and pivot accordingly as market forces change, are an important part of that process.
Gotcha. So I know you guys are on your uh, third fund. What does Caduceus plan to do in the next 12 months that you don't have yet? And yeah.
Yeah, we'll continue to sense the market for new innovation, new opportunities that help healthcare organizations lower the unit cost, create better outcomes, uh, enhance their revenue stream, make their processes more efficient. I think we've only started that process, frankly, in the ecosystem. More and more, wearable technologies and direct to consumer. technologies are playing an increasingly important part in that process. Information and data continue to be important, ensuring that personal information gets protected, in a way that creates security and privacy is important. Are all factors that come into play. Ultimately, we have an aging population. People are living longer, and so health and wellness programs are increasingly an important part of that. And the consumer will be much more engaged than they ever have. What gets reimbursed will evolve and change over time. We need to monitor that, understand it, and pivot accordingly. The regulatory environment will continue to change and evolve as well. It's just part of the equation. We have a healthcare system that relies on a third-party reimbursement model that will likely continue, but it will evolve. And particularly in an environment where organizations are looking for efficiencies in their process to deliver a better outcome for the consumer. And new technology and innovation changes, right? I mean, we create a tremendous amount of innovation and supply of new healthcare in this country. I think that's an important part of why we're a world leader in terms of how we treat our customers and care for our individuals. But access continues to be an important challenge, and technologies that impact that will be ones that we'll follow closely.
Are there? I know as a VC fund, are there any uh, companies that you want to highlight that are pushing the boundaries of where healthcare could be going that you'd be comfortable sharing?
Yeah, we don't typically comment on individual companies. Part of it is organizations that we are looking at. Part of it is just being fair and balanced. There's a fair amount of information online around emerging technologies and innovation. That's part of the both the challenge and the opportunity for investors in the current marketplace is to try to understand what new technologies and innovation could have an impact on the market.
Great. That's thanks for that. So I want to throw this question out there and just as a closing thought, right? Just want to see where it lands. This is about your white paper that you've put together. You spent this conversation championing that distribution is the new moat, but the open AI NVIDIA deal you reference in your white paper, that's two technology companies partnering on infrastructure. At what point does the channel become the technology, and does your thesis survive that?
Look, channel partnerships will evolve and take new forms. Some of them will be technology driven, some will be customer driven, some will be business model driven. The concept of understanding who your customers are, how the product or service gets to market in the most efficient way will always be relevant to organizations that are looking to grow their business. Will the platforms change? Yes. Will distribution channels change? Yes. Will forms and sales models change? Yes. But the concept of accelerating growth at scale is an important one that will likely stand the test of time.
That's very deep there. So yeah, appreciate the conversation that we had. I want to direct folks, if people need to reach out to you or anybody at Caduceus, how can they do that?
Yeah, we all of our information is publicly available on our website. We're pretty transparent. We outline who we are, what we do, the fact that it takes more than capital to scale businesses, who our portfolio companies are, what our investment thesis is, our insights and points of view are all there, as well as the advisors who help us, think about the investments we make and the channel partnerships that we structure. And so I'd encourage you to give it a read, look us up, and if we can be helpful in terms of scaling your business or thinking about new opportunities for you, don't hesitate to reach out.
Wonderful. And just for the folks listening, I'll be putting those links to the website and even the white paper as well that Peter wrote in the comment as well. So, ladies and gentlemen, just want to say thank you for joining us. Peter, thank you for coming on and sharing your thoughts and talking about Caduceus and the really interesting and fascinating concept of having channel partners. It's distribution, but at a looked at in another angle, which is very, very overlooked, but very, very important at the same time. So,
thank you.
Yeah, I'll end the stream here, guys. Thank you for watching, and we'll see you at the next episode. Peter, hopefully we can catch up sometime in the future with other episodes too.
Look forward to it. Thank you. Okay.